All right, today we're going to do a deep dive into the technical story behind just one stock, Cisco. Now, the charts are sending some really powerful signals, but there's this one contradictory clue that could change everything. So let's follow the money and see what the data is really telling us.
So here's the big question, right? Is Cisco stock just gathering steam for a major move higher, or is it starting to show signs of exhaustion, getting ready for a pullback? Let's treat this like a detective case and look at the evidence, piece by piece.
Okay, here's our starting point, Exhibit A, if you will. At the time of this analysis, Cisco is trading at $77.97. This is the number at the absolute center of our investigation.
And right away, our first clue is a big one. I mean, really big. The current price is way higher than its 200-day simple moving average, which is, that key measure of the long-term trend. Think of that 200-day average as the ocean's sea level. Right now, the price is riding a very, very high wave.
When a stock trades this far above its long-term average, technical analysts have a pretty clear name for it, a strong bull market. The tide is rising, and it's been lifting this stock for a while. The big question, of course, is how much longer can it keep going up?
And get this, it's not just in an uptrend. It's trading at over 92% of its highest price for the entire year. This tells us that bullish momentum is absolutely real, and it's pushing the stock right up towards its peak.
Okay, so the price action looks fantastic, right? But is this just, speculative hype, or is there real conviction behind this move? To figure that out, we got to follow the money trail. Now, before I throw the next number at you, we got to talk about a super important concept, accumulation. This isn't just you and me buying a few shares. This is when the big players, we're talking institutional funds, are consistently buying up huge amounts of stock. And because these big funds do a ton of research, their buying is one of the strongest signs of confidence you can find.
And wow, here it is. This number comes from an indicator that measures that accumulation. A positive number is good. A number this massive, over 11 million, is a screaming signal that institutional money is flowing into Cisco, and that's providing some serious support for this uptrend.
And what's really cool here is just how consistent this trend is, even in the super short term. The price is staying ahead of its 5-day average and its 20-day average. It's kind of like a runner who isn't just leading the race, but is also managing to widen the gap step by step.
And then, for the big picture, the long-term view, we've got the classic bullish signal, a golden cross. This happens when the faster 50-day average crosses above the slower 200-day average. It's a really powerful confirmation that momentum has shifted firmly into bull territory for the long haul.
Okay, so far, this case seems like a slam dunk, right? Everything, and I mean everything, is pointing up. But in any good investigation, you always have to look for that one clue that just doesn't quite fit. And we found one.
So let's just quickly run through the case for the bulls again. We've got the RSI, that momentum indicator, looking strong but not yet in the danger zone. The MACD is positive, showing the trend is up. And of course, that golden cross confirms the whole long-term uptrend. The evidence is pretty overwhelming. And that leads us to the big but, the critical question we have to ask. With so much positive momentum, is it possible the stock has just run too far, too fast? Is there a piece of data that's telling us, hey, maybe it's time to be a little cautious?
And bam, here it is, our contradictory clue. The StochRSI, an indicator that measures how overbought a stock is at 100. That is the maximum possible reading. It basically suggests that the buying pressure has been so intense, the stock might be running on fumes and could be due for a pause just to catch its breath.
So, what do we do with this? We've got these two totally competing narratives. On one hand, a super strong uptrend backed by big money, and on the other, a short-term warning of exhaustion. Let's see how these clues map out two possible futures for the stock. All right, these are the numbers you're going to want to watch like a hawk. Think of 77.51 as the floor, the support level, and think of 78.31 as the ceiling, or resistance. The stock's next move will most likely be decided by which of these levels it breaks first. So here's how it all breaks down, according to the analysis. If the stock can punch through that ceiling at 78.31, the next logical target could be that big psychological milestone of $80. But if it falls below the floor at 77.51, it would likely pull back to test its 20-day average right around $16.
Okay, we've laid out all the evidence, the good, the bad, and the one that's a little confusing. So what's the final verdict from this report? Where does the weight of the evidence really fall?
Well, the verdict is actually pretty darn clear. Despite that one cautionary signal, the overall picture is so overwhelmingly positive that the analysis concludes with a strong buy-hold rating. The sheer force of the trend and that strong institutional buying are the dominant factors here.
And this is where we solve our little mystery. The report interprets that contradictory clue, the overbought signal, not as a sign of an impending crash, but simply as a signal that the stock might need to trade sideways for a bit or have a tiny dip. It's a pause, not a reversal.
So we're left with this really clear picture of a stock in a powerful uptrend. The key takeaway from this whole deep dive isn't if the stock is bullish, but rather how it's going to handle its next inevitable pause. Will it consolidate sideways to reset before the next leg up? That's the key question to watch going forward. Thanks for joining this explainer.